traders, this is Cousin Vinny coming to you from theclosingprint.com on December the 10th, 2017. In this edition of your weekend video newsletter, we'll discuss the indices and where they might be headed. We had a mixed picture last week with the S&P 500 higher, NASDAQ was mixed, and we had the IWM lower with the NYSE composite higher, along with the industrials. FTSE was higher, Nikkei and Hang Seng were lower. Market trends, we have the S&P 500 up 18.43% year to date, and the NASDAQ 30.45%. Wilshire 5000 is showing a lower high, with Chaikin money flow fading last week. The bond stock ratio is still bullish, dropping substantially last week. Dow Composite is more bullish than bearish at the present time. Institutional sentiment, NYSE is showing divergence with the comp at highs. Cycle up on NYMO and NAML. Though Facebook was higher, Amazon was lower, Netflix and Google were higher, and Apple and Nvidia were both lower for the week. Breadth, we have NYHL. The cycle is faltering, turning back down. The index is at a double top, potentially, and we have the high-low percent at 77.10, dropping 5 points last week. Cycle is down, and the NYAD is in and out of the red zone, showing buyers at the end of the week. Put-call ratio is at 94. That's moving higher towards a bullish zone presently. Okay, so if we start off with the spiders, we'll note that price action is above all of the moving averages. The 9, 20, and 50 are all pointing higher. We did finish on a high point to end the week, and we are at slightly above volume by price support resistance, closing the week near the highs. We have some conspicuous volume, 3 days in a row, closing very near the 75 million mark for 3 days in a row. With stochastic moving higher, MACD above its signal line, and most importantly, tick cumulative closing below its signal line for the first time since November of last year. Significant in that we're at all-time highs, and institutions are selling more stocks on the downtick than they're buying on the uptick, despite what we're seeing in price action and the indices in general. So that's something of a caution signal that we'll keep an eye on next week. The EBON stock ratio moved lower again last week, finishing off at the lows. This reflects investors' appetite for equities outshining that of fixed income and bonds. So as long as this continues to move lower, that's bullish for the markets, generally speaking. Reflecting on sectors for a moment, we did acknowledge that XLE, XLF, XLI, industrials, were strong. We do see XBI, biotechs, healthcare being the strongest. We're looking for a follow-through this week in those sectors, and we'll look at those in a minute. For the most part, you can see the heat map is green predominantly, with some red showing up in real estate, technology, semis, and internet-related stocks. Telecom was somewhat weak, though it is still green as reflected in the heat map. International markets were mostly mixed. We do have Brazil still hanging in there around 4.38%. We did have Argentina leading the strongest, along with Greece and Turkey, as we can see. Netherlands looked okay, Sweden looked okay, and we had some strength in Japan. The Chinese indexes were off again last week, as it was the previous week at that double top that we mentioned several weeks ago. Note it doesn't report until the end of February. Nice volume, MACD turning up, and stochastics as well. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from closingprint.com. I will send out a watch list at the end of the day on Sunday. Look for stocks that will look to trade prior to the opening bell on Monday. Take care. We'll talk to you soon. Have a great weekend. We'll see you soon.